All right, so I wanted to go over my trades for the week. So for the week ending June 25th, total profits for the week from selling options is $384 US. So let me go over each trade one by one. So first trade here, I've got a SPY put spread. So if you watched the previous video, you remember how this one got filled. This one got filled after hours when the SPY, last Friday, if you notice, if you look at the chart of SPY took a drop at around, dropped to almost 413. So this one got filled for 80 cents, 402.397 put spread for 80 cents. I closed it this week, June 22nd. So opened June 18, closed June 22nd for 31 cents. So it's a decent profit, but of course, because of commissions and it's only one contract, it eats up a lot of the profits. So net profit of $36. Let's just see what would have happened if I did two contracts. Would have been $82. So more than double of 36 because commissions get diluted. All right, let's go back to one contract. So next here, I've got a Peloton naked put. This is a good trade. Sadly, once again, I closed it too early. So June 21st, Peloton dropped. I think it was down like 3 or 4% for the day. So I sold a 90 put. So it was trading at around, Peloton was trading at around 103. I sold a 90 put for August 20th expiry. I collected $3.50 from selling the 90 put. I did one contract. And then June 22nd, so the next day, I closed it for $2.50. So that gave me an $88 net profit. Now, the problem with that is the day after, it was trading for like $1.50 or even less. So if I just held on to it a little bit more, I could have made more profit easily. Now, it was just a one-day trade. I closed it because I got $100 quickly without even having to go all the way to August 20th, which is 56 days away. So that's why I took the trade. That's why I closed the trade early, but it sucks because the next day I could have made easily over $200 profit. Next here, this was a covered call that I did in my RSP. So a Roblox covered call. I opened June 16. I closed June 23rd. So I sold the 60 covered call strike. So I bought 100 shares at whatever the current market price is, and then I sold a 60 call. By doing that, that made my entry, my net cost, my net debit was $58. And then the stock went up a little bit. The extrinsic value of the call option dropped a little bit. So by June 23rd, I was able to close it or get out of the trade for $59. So that gives me a $1 profit again, so $88 net profit. Now my max profit would have been $2, but I would have to go all the way to August 20th, or Roblox would have to go even higher. So I decided to just take the $1 profit and move on. Next here, I've got AI. So this is a naked put that I opened on June 4th. I closed June 23rd. Now, the sad part is I opened the 55 strike for $2.50. And then the next week, this put was worth like over $4. But now, so I had to wait. I could have sold another one at $4, would have averaged on the sale of the option, but yeah, I didn't want to add another contract. But it sucks because yeah, it would have made way more profit if I sold another one at $4, but I didn't. I just held on to it, and then finally this week at June 23rd, I closed it for $1.55, and I think it's worth I could have closed it for a better profit as well. Right now, I didn't check, but I'm pretty sure it's trading. This option is trading for less. Regardless, I'm happy. Came out of it was because at some point it was down $200, so. I'm happy I came out with a profit of $83. It had a July 16 expiry. So not bad. I'm not disappointed. Next here, so this one was open at the same time as Pinterest here. Open June 21st. Pinterest on Monday dropped hard. Yeah, so June 21st, it dropped like I think almost 4 or 5%. So I opened a 60 put for August 20th, collected $2.20. And then June 24th, I closed it for $1.21. And I think this one's trading around the same thing. So I don't feel bad closing this one. I don't think that I closed it too early. I'm not going to wait all the way to August to collect more profit. So I'm not disappointed about this one. I'm mostly disappointed about Peloton for sure. Anyway, so total profit for the week is $384. There were two earnings this week. There was Fedex and Nike. I didn't play any of them just because they both went up a lot, and I like to play the put side, so I didn't feel confident playing the put side when the stock had already gone up a lot, heading into earnings. if I had played the put side regardless on Nike, as you can see, the stock shot up after earnings. So 133, the stock was trading at 133 before earnings. I could have sold probably, I don't know, the 130 strike. It would have been a winner because as you can see, the next day it's trading at 154. Now, the reason I didn't play it is because the week before I was thinking of playing it at a 122 strike, which would have been way better. And since then it came back up. So I feel like it bothers me because I feel I didn't get the best entry. I missed out. I don't want to play a put after I saw it go up from my initial entry to where it is right now. So I didn't play it, but if I had played it, once again, how many times do I talk about puts winning in earnings? It's not the first time. And let's look at Fedex. If I had played Fedex, if I had done a naked put, I would have done the 285 strike. So this one would have been a winner. Would have been a little bit stressful because, as you could see, Fedex dropped all the way down to 286.57. Yeah, but it would have been a winner if I played Fedex as well. The bad part is that it takes a lot of buying power to sell a naked put at 285. So I didn't play it. Didn't want the stress. Plus, I have enough trades, so I didn't feel like I should play it. I'd rather play something that's very obvious, like, or something that has a high expected move. Fedex expected move was only 15 points. When it was trading at 300, expected move was 15 points, so that puts me at 285. Doesn't feel far enough for me. But something like Zoom or Tesla usually has a big expected move, or even Spotify. I mean, when Spotify was trading at 290, expected move was 30 points. So these are the plays that I really have to play. So yeah, so these were my trades, and now my remaining open trades. I've got about 19 open trades, so not bad, doing better. It was 21 last week. I've got a covered call on Luminar, which is doing good. I could actually roll it from July 16 to August. So rolling it, that means I'd buy back the 27.5 strike and sell the same strike, but at an August 20th expiry, and I'd collect the difference in credit. So it would be probably around like $1 credit. So I could do that. And by collecting $1, it brings my net cost, my cost basis, it brings it lower. So by bringing it lower, when at some point Luminar is trading above my strike of 27.5, I lose my shares at 27.5, but my net cost is 21, for example. So I make a bigger profit. Next year, I've got a cover call on Rocket. Same situation as Luminar, doing well. I could roll it to August, or I can hold on to it. Doesn't matter. Got a covered call on Bitcoin. So this one's pretty bad because Bitcoin is trading probably at around 565. So I bought the shares at around 650, and I sold a $1 call on Bitcoin at an $8 strike, thinking Bitcoin would go back up. Instead, it has dropped, but my net cost, or my cost basis, is 5.65. So what's going to happen is I'm probably just going to sell another call on it, maybe try to collect another $1, bringing my cost basis, for example, to 4.65. But I don't know which strike I'll be selling the next call at. But I still have until July 16, so I might not do anything. I'll wait till August. I'll wait till July 16th to sell the August expiry. Next year, I've got a covered call on APXT. This was initially a naked put in my margin account, but because the margin requirement for the stock, it was 50%, I decided to move it to my RSP as a covered call. So I just converted a naked put to a covered call, that's it. And I rolled it to July 16, so now my cost basis on this position is 11.45. So if I lose the shares at 12.5, I make a profit of $1. But I think right now it's trading at $10 or $11, so it's not even close to being profitable, but I'll just keep selling calls and reduce my cost basis. That's all I could do on this one. Spotify, so if you remember, I had a 250 put for July 16. I rolled it this week from 250 to 240, so I rolled the strike down from 250 to 240, and the expiry from July 16 to August 20th, and I collected a credit of $3.50. So it's written up here, $3.50, by rolling it from 250 to 240 from July to August. So now my total credit on this naked put on Spotify is $7.70. Right now, this 240 put on Spotify, August 20th, is trading for about $7. So I can close it right now for 70-cent profit, but my plan is to hold on to it till all the way to August. I want to collect full profit on this one. So this one, I mean, I was holding Spotify when it was trading at 215, 215. So I think it deserves for me to take it all the way to August, all the way to expiry, and just squeeze as much premium as possible. I want the full profit on this one. And if it falls below 240, which I doubt, but if it falls, I'm just gonna keep rolling it again for more credit. I've been rolling it for almost 3 months now, since April, so I don't mind holding on to it. But I want my full profit on this one. It's something personal. So next, I've got Corsair here, which is a covered call. Did it in my RESP, so at a 30 strike, I sold the 30 covered call. Puts my net cost at 27.75. So as long as Corsair is above 30, if Corsair is above 30 by August 20th, I can close the whole position for $30, which makes my profit the difference, so $2.25. Or if it's trading, let's say at 31, I can roll the call. I can sell another call at a 30 strike and collect more premium again. But if it's trading at 35, 40, I won't be able to collect enough premium from selling the 30 call, so I'll just close the position instead. Get my capital back, but I confirm a profit of $2.25. Next year, I've got a covered call on HIMS in my TFSA. At some point, I could have closed the whole thing for maybe like 3 weeks ago for 12.5. My order didn't fill, so now I still own it, but I just keep rolling the call and collecting credits and bringing my cost basis lower. So now the next time HIMS is above 12.5 by expiry, and let's say I lose my shares at 12.5, or I close the whole trade for 12.5, my profit will be 12.5 minus 10.9. And if it's not closable, then I'm just gonna sell another call. I'm gonna roll my 12.5 call from August to the September expiry, but I still have 56 days to go, so nothing to do with that. Etsy, remember, was a put spread at 180 that I rolled down to 150 strike by converting a put spread to a naked put. So now I've got a 150 put for August. My net credit on that is $2.60. So $1 from the initial put credit spread, 15 cents by rolling the put credit spread. I rolled it twice, and then $1.45 by converting it to a naked put. And actually, this put now is worth around $3. So I can actually close the whole position for $3, which would give me a 40 cent or $40 loss. But I'm just going to hold on to it till August. And once again, this is another one. I'm going to try to squeeze full profit out of it. I'm just going to hold till August and try to make max profit. Now, the annoying part is now Etsy's above 180. So it's above my initial put spread that was completely breached. That forced me to roll it as a naked put. And it took just 1 week for the stock to be above 80. So I could have rolled it to like 175 or 170 at a June 25th expiry, and I would have collected credit, and I would have been done with this trade already. But instead, I decided to go from 180 to 150. I decided to bring my short strike 30 points lower just to be safer. I had to go all the way to August to do that, and evidently it wasn't necessary. So that's a little bit annoying, but at least I'm not in a bad position. But I'm just not in the best position. I didn't take the best deal. As you can see right now, Etsy's at 185. Just ridiculous. Yeah, anyways, what are you going to do? So this is a new trade that I opened today, June 25th, on Sophie. Covered call. I did a 20 strike. Net cost is 17 by August 20th. So what this means is if Sophie is above 20 by August 20th, I lose my shares at 20, but my net cost is 17, so my profit is $3. If it's slightly above 20, like 21, I can roll it again. I can sell another call, bringing my cost basis maybe down to 15 or 16. So it depends where the stock is trading at. If the stock is flat, it's ideal for selling covered calls. But if the stock flies to 25, 30, then I'll just close the entire position and take my profit. My profit would be the difference, 20 minus 17. If the stock drops to 15, well, my net cost is 17, so my loss really is $2. I'm not going to close the position. What I'm going to do is just sell the call, sell another call. Now, if I sell the 20 strike while the stock is trading at 15, it's not going to give me much premium. I'm probably going to collect 50 cents. But at least I'm bringing down my cost basis while I wait for Sophie to come back up. I would not have played this if I didn't think the stock is eventually a stock that's going to keep going up. I've got Wish here, a covered call. So yeah, these ones are pretty bad. These ones are just, I'm just waiting for them to recover, but I'm pretty far in the money on them. So covered call on Wish here. The stock is trading, I think, at like 14, 15, and I had a 22.5 strike. But I collected so much premium that my net cost is 15. So my net cost is 15 while the stock is trading at around 14, 15. So I'm not doing bad in terms of net cost, but it's not profitable. Naked put on Curiosity Stream. Yeah, my strike is 17.5, November 19 expiry, but I collected a total of $3.32. So my break even really is about $14. Sumo, same thing. I've got 2 contracts sadly on Sumo, 30 strike, and the stock is trading at around 21. But my break even is 30 minus 3, so about 27 or 26.5. So these ones, it's just a matter of rolling and waiting for the stock to recover. So these ones are not in a great position. It's just a matter of waiting for the stock to recover. This one as well. All of these here. Snow, it's out of the money, but because I'm all the way to December, it's not really closable. It's a put spread. It was initially a 5-point wide put spread. I rolled it into a 10-point wide put spread. I had to go all the way to December to be able to roll it for a credit. I got a 30-cent credit. And now the stock's trading at around 250, but I just can't close the spread because it has so much time value left because of the expiry, which is all the way in December. So it's safe. This position is safe, but it's not closable. And this is another covered call that's doing pretty bad that I just have to keep rolling and waiting for the stock to recover. So these are my current positions. So if we look at my P&L, so P&L for June, June I think has 2 more days. We have 2 more, 28, 29, 30. We have 3 days. I don't know if there's going to be any more trades that I'll be closing, but maybe I'll open a trade and close it in the same week, maybe if that's possible, maybe. But if not, my P&L for June will be around 2,400 US. So what can we conclude from that? It's better than May. It's better than April, but it's not as good as March. It's almost as good as February, and it's not as good as January, but it is as good as December. So if we take the average, from January to June, so this year, the average is about, at the bottom here, you could see it, average is about 2,400 US. So yeah, it looks like my average is around that. But as you can see, April and May, when the market was doing bad, my P&L was much lower. So that forced me to, I couldn't close anything. I just had to keep rolling. So I wasn't able to confirm any profits. But as the market comes back up, I was able to confirm and close more trades for profit. And if you go back in 2020, I mentioned it in many of my videos, but I'll mention it again in case you haven't seen my other videos. But so as you can see, September and October were pretty bad. September I lost money. October was only 593. But basically in November I changed my strategy. Mostly I like to sell puts on red days, either a naked put or a put spread. Now in September and October I was selling mostly puts, but when my management of the puts was different. So when my put would get breached, when my put spread would get breached, what I used to do is I would sell a call spread against it to reduce my max loss. Because by selling a call spread that is the exact same width, same expiry, I cannot lose on both sides. When I sell a call spread against a put spread, I'm either going to lose on the call side or I'm either going to lose on the put side. So it's like a hedge. So I would sell a call spread just to reduce max loss because my put spread was breached. What ended up happening most of the time is the call side would get breached because the stock would come back up above my short put and ends up breaching the call side. So I took a lot of loss from the call side just by which I was using to mitigate breached put spreads. But in November, I stopped selling that call spread because by looking back on my trades, I realized where did I lose most often. So I stopped selling call spread and I would either let it play to expiry or I would roll the put spread, try to save the put spread either by rolling it, by increasing contracts or by turning it into a naked put. And when I started trying to save the put and not just giving up on it and selling a call spread against it just to reduce max loss, when I started saving it, as you can see, it made a big difference in the P&L, and that's really the only difference from September and October and November and forward. So yeah, so that's the P&L. These are my trades for the week. So if you have any questions, leave in the comment section below. Like always, if you want to join the Trade Alerts group, so it's via WhatsApp. It's $25 a month. I send my trades as soon as I place them or even before I place them via WhatsApp. And these are the exact trades that I send. So everything that I'm doing here, you would get via WhatsApp. So if it's something that you like doing, selling options, I only do naked puts, put spreads, and covered calls. So these are my main strategy. So if it's something that you're comfortable with, you already know how to do. But it's just a matter of you don't have time to look for trades, or you don't know what to sell or which stock or which strike, and you just want to follow my trades. So then the group is useful to you because I'll be sending my trades as soon as I place them. And of course, if you can open an account with Questrade, use my referral link below to get $50 in free commissions. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.